In this video, we will compare Alphabet and Meta stock. We will look at some of the numbers. We will see how strong is the moat for both companies. And then we'll compare their valuation using free cash flow yield to decide which stock is a better buy at this point. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. It is absolutely free and you will not miss a single new video. Okay, I believe that both companies definitely have a moat and it's visible in their numbers. If we look at the return on invested capital for both companies, we can see that it is close to 30% for both companies. If we look at the largest social network, Facebook, we can see that it is down significantly in the last month. The issue here is growth rate. There is around 4 billion internet users and Facebook has 3.5 billion active users. So where can Facebook grow? Also, Facebook isn't popular in people who are younger than 20 years old. To improve that, they make Reels, short video format. They also previously made acquisitions of WhatsApp and Instagram. So their focus here is to monetizing the existing users. So the future growth can come from existing users. Also, Facebook or Meta is heavily investing in the metaverse. The problem here is that nobody, and even Facebook I believe, nobody knows what metaverse will be like. And the result of this huge investment is unknown. So this is the huge source of uncertainty. So Meta is ramping up their capital expenditures on metaverse and the result of this investment is highly unpredictable. Okay, Google or Alphabet has the largest search engine. And there are no close competitors. The closest competitor has less than 3% of the total search traffic. So on the first glance, there are no close competitors to Google. Also, Alphabet has YouTube. YouTube already brings around 12% of the total revenue of Alphabet. I have made a video if Alphabet can spin off its YouTube business. I will link to it in the end. An important thing here is that YouTube has a higher growth rate than Alphabet. Also, it has Google Cloud, which I believe is the third largest cloud business. The first place takes Amazon Web Services, and Google also has other bets. Google Cloud and other bets are not yet profitable, but it may change in the future. Also, things change in technology sector pretty fast. A lot of search traffic comes from mobile devices, and for example, if Apple decides to change its default search engine to Bing, for example, so this is an additional risk for Google. Okay, now let's look at the valuation of both companies. We will use free cash flow yield as a valuation metric. We are using next 12-month free cash flow yield. So what is free cash flow yield? It is free cash flow divided by market cap. Free cash flow is cash from operations minus capital expenditures. If we look at the chart of free cash flow yield of Facebook or Meta stock for the last 3 years, we can see that currently Facebook is trading at around 5.4 free cash flow yield, and the average was 3.6. If we look at the same chart but for Google or Alphabet, we can see that currently Google is trading at 5% free cash flow yield, and the average was 3.7. So if we bring this data to the table, we can see that Meta is trading at around 50% above its average yield, while Google is trading at around 32% above its average free cash flow yield. So if we apply the upside to the current price, we get the fair value of Facebook stock or Meta stock at 277, while for Alphabet is 3,162. So according to these metrics, Facebook is trading 20% cheaper than Alphabet. Okay, which company is a better buy? Both companies have a huge moat, it's visible in their numbers. Facebook is the largest social network. It has issues with growth, but it can more effectively monetize the existing users. Also, it heavily invests in metaverse, but the result of that investment is unknown. If we look at Google, it's definitely have a huge moat. It is the largest search engine. It has YouTube, it has Google Cloud and other bets. Also, it is trading at a very compelling valuation compared to its own history. I believe both companies deserve allocation. If we look at the famous investors that I follow, Pat Dorsey also invested in both companies. If we look at Terry Smith, famous British investor that I follow, he also invested in both companies in the recent quarter. Also, I have made a video if Google can spin off its YouTube business. Here's the video. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you for watching till the end and see you in the next video.